Mark, I decided that, especially during this downtime that some of us are having, that it would be a good idea to get some good information out to my clients. And so we're looking to get some of your knowledge to include, because you have specialized background. Mark and I met each other when he saved a deal that was falling apart on a big listing of mine, and the buyer was having a last minute glitch in their financing, and Mark took it over and rescued it and got it to settlement. And since then, we've had a number of other buyer transactions together and generally just enjoy each other's company.
That's as accurate as you can get.
So tell us a little bit about your background, Mark.
I'm a 30-year veteran of the mortgage business, doing loan originations, managing branches, owning net branches. I've survived the mortgage meltdown. I've survived the effects of 9/11. And now I am surviving the new reality that we have here of the coronavirus and its effect on income, on qualifying people, and just helping people make sense out of what is going on.
Tell me a little bit about what are some of the biggest questions you're seeing of coronavirus on your business and people's ability to refinance or finance for the first time.
90% of the mortgage business and the phone calls that I get now are for refinancing. 20 phone calls a day, not unusual. Basically, the first question is people ask me is, does it make sense for me to refi? The first thing a mortgage professional should do is ask you certain questions to get to that answer.
What would some of those questions be?
The first question is, what is your house worth? A lot of people, well, I don't know, the house next door, the house 3 miles away. My suggestion would be for them to call somebody like you who has access to the MLS and can tell you, at least give you a very close estimate of the most current information about what your house is worth. The next thing should be have your mortgage statement in front of you. That will let your mortgage person know what your balance is, what exactly your interest rate is, what is your principal and interest payment to figure out if it's worth it.
So in layman's terms, what people hear a lot is the difference between PITI, which is principal, interest, taxes, and insurance, or just P&I, which is just your principal insurance. Those are two terms that you as a consumer will hear a lot, and that's what they're talking about.
Right. And your mortgage person will be concerned with the PI part of it, principal and interest. Next important question, how many years do you plan on being in your home? Nobody has a crystal ball. Take your best guess. I mean, that's all anybody can do, and that will enable your mortgage professional to figure out, what is the payoff of refinancing. Not only myself, but every mortgage person is extremely busy. It's to your advantage to have that information before you make the call.
Okay.
So to get them, of course, it might be 2 days before your mortgage person can get back to you, which brings me to my next point. In this market, we have had wild swings of a half a point in a day. If you can lock a rate with your mortgage professional that achieves your goals.
What do they have to do to lock it?
Okay. Well, we're going to talk about normal and we're going to talk about now. Normally, name, address, we take an application and in normal times, we can lock a rate.
At that time, do you have to run credit? Because I know my clients, that's always their concern, is that
Yes.
they're getting their
Mhm.
credit dinged too many times.
Well, okay. The rule is within 14 days, if you have, let's say, XYZ bank, mortgage company, bank, shopping for a mortgage, it only counts as one.
Okay.
Okay.
Do you know how much of a hit it is? Is it a 25
Uh,
point hit or?
it might be 3 points, 7 points. You're not going to get a 20-point drop.
Okay.
Where if your credit is marginal,
It could make a
it
difference.
could make a difference. And the only way a mortgage company can price your loan is with your credit score. So there's, you know, if I talk to somebody, say, well, I don't want you to run my credit, I go, well, here's the rate I can give you, based on a 700 credit score. If it comes in lower, that quote is off.
So so you actually are able to say to them, okay, I'm not going to run your credit, but here's the range of interest rates it might be depending
Yes,
upon where your credit is. Yeah.
correct. Now that's normal. Now we come into
Coronavirus.
there's still manual labor in this. Okay, we can only put in each loan officer can only put in 2 to 4 applications a day physically. And now you have the issue of interest rates moving 2 or 3 times a day. So there's a little bit of art here. My point is, if you get a decent rate, a rate that achieves your goals, and I'll talk about your goals in a second, but if you find a rate that achieves your goals, just tell your loan officer, if he or she can, to lock it. Pigs are going to get slaughtered here.
Yeah. Can people lock it without putting a full application and payment for appraisal into you, or no?
A full application you need, an appraisal, no.
Okay.
The appraisal, legally, we can collect money the way the new RESPA laws are. We can't collect money until we disclose the terms of the loan to you.
So it's the application and no money has to change hands yet in order for them to lock their rate.
Correct.
Okay. Now, several days ago, when the Fed lowered the interbank rate and the bonds seem to be doing better, which is how mortgages are kind of based, is on where the 10-year mortgage bond is. People were saying there were, even with 15-year loans, you could get under 3 points.
Barely.
And, yeah, barely. But that you could get low to mid 3s, for otherwise. What I've heard, and I think you and I had this conversation, is that that's been bouncing up back into the 4s.
It's approaching 4, yes.
It's approaching 4. So what is the point at which it makes sense for somebody to refinance in terms of the difference between their current interest rate and the interest rate you have, and the costs associated with doing that?
Okay, first let's talk about why people refinance. Okay, the goals are, some people, first thing is cash out. And in these times, people want an emergency fund. I don't know what's going to happen with my job, my business. It'd be nice to take some cash out. And we can go to 80% of the value of your house for cash out. Second reason, some people are still in situations where they have PMI insurance, and their house is appreciated to where they have 80% equity in it. That's where it would be really important for for my borrowers to call somebody like you to find out before they spend $425 for an appraisal,
Right.
to find out exactly what the value, your best estimate of what the house is worth.
So just in terms of clarification of terms, we
Go
talked
ahead.
about PITI before, principal, interest, taxes, and
Okay.
insurance. One of the points of insurance is PMI. It is not insurance for the consumer. It is
No.
the banks insuring themselves against you defaulting as a consumer.
Mm-hmm.
And it can add, up, $100 or more dollars
I've
to
seen
your
it at
payment a
100.
month.
I've seen it
Right.
at 200. I've seen it
Right.
at 250, depending
So
upon the
yeah.
loan size.
So it can be valuable to be able to get rid of it. And
Right.
with the current rules, if it's an FHA loan, the only way you can get rid of it is if you refinance,
Mm-hmm.
or if you get to the 80% and you tell them, I'm at the 80% and here's the proof, getting an appraisal, so that they can drop it, because they will not, as I understand it, automatically drop it.
Mm-hmm.
Is that a fair understanding?
I'm not an FHA expert,
Okay.
so I will get back to you on that one. The next reason it can be to shorten the term of your loan. Okay, you know what? I'm coming upon, I had a 30-year loan. Let's say 45. I wanted to retire when I'm 60. Well, maybe I should take a look now that my principal is down. Let me take a look at what a 15-year would be on a new principal and see if that makes sense to me.
So in that case, they might end up with a higher payment than what they currently have, but
Right,
they're making that decision strategically because of what they want to do going forward.
right. There's no one answer for everybody. Everybody's life is different, and just when I think I've seen almost everything, somebody comes up with a situation that just, okay, and we deal with it. And going down to the last reason, which a lot of the calls are, I want to lower my payment.
Right.
What you have to do with that is take the difference between your present payment and what your new payment would be, divide that into the cost of the refi, and that will tell you how many months, and divide by 12, that will tell you how many months it will take to recoup the cost of that refi.
What are the costs of doing a refi generally?
Refis in the market these days, I've seen cost anywhere from $1,500 to $2,000. Okay, for bank charges. Now, that $15 to $2,000, application fee, appraisal, credit report, flood cert, document prep. I would question any bank fees over $2,000 from the
Okay.
bank.
Now, as far as bank fees go, one thing that I have been seeing coming back lately, and I hadn't seen it since early on in my career, is origination fees.
Well, origination fees can act two different ways. One is an origination fee can be used to lower your interest rate.
Well,
So
that's discount points, right?
right, but and you're gonna get really technical here, depending upon how a mortgage company discloses it. If you're going down that, if we want to take origination and discount, origination will normally be a broker's fee that they will be charging you to get a loan. Discount.
My question on origination fees is that their margin that they're building in there, and is that something that consumers can negotiate with them?
I have to talk for other mortgage companies.
Okay.
You can ask.
You can ask.
We
Yeah.
have The thing about being a bank is I can't give one person lower fees than another. I can't discriminate because of loan size.
Okay. So just because I did not introduce you that way before, Mark works for First Trust Bank. And in the industry, there are banks, there are credit unions, there are mortgage brokers. Explain a little the difference of the three.
Okay, we'll start with the bank that I work for. $3 billion, local bank, First Trust, 85 years in the business. We fund our own loan. We have a credit line to get our own money. We're federally regulated. We have two people who are just, not for the bank, just for the mortgage company, who are compliance, just
Who
to,
make sure that your loans are in compliance with all the Fannie Mae, Freddie Mac
right,
regulations and the RESPA
And,
regulations.
it's a lot. Sometimes when, 2 and 2 make 3.99
Right,
and an underwriter wants something, I have to get it,
right.
on that. But
What is the benefit of using a bank who underwrites their own loans as opposed to a credit union
mhm,
whose, I guess, their membership underwrites the loans, or a mortgage broker who shops around for
right.
loans?
I have friends who are mortgage brokers. The difference is when you're underwriting your own loans, you have control. And especially in times like this, control is extremely important. I know my underwriters, I know my processes on a first name basis. I know where they sit. If I disagree with something, when you're a broker and you're delivering your loans, trying to save an eighth someplace, and your loan is out in Wisconsin, I don't like the relationship. I'm talking me personally. I'm not saying mortgage brokers are bad, but myself, I like hands-on.
On people.
And if I have to get something to settlement, I can walk over to my closer and put it on top of the pile. This is a settlement for Janet. This has to go today. You push this in front of the refis
Okay.
on
Now,
that.
when you say you underwrite your own loans, do you also keep your loans or do you then
Okay,
sell them?
a little of both.
Okay.
We sell the loan to Fannie Mae.
Okay.
Okay, but we keep the servicing on the loan at First Trust, which
So,
means we'll
so I'll still be
control,
sending my payments to you.
right. And if there's any trouble, there's too much or too little in the escrow account, uh, you're not dealing with Fannie Mae out there, you're dealing with locally, First Trust. After people we go through the questions that, what is your house's worth? What's the P&I? How many years? We go through all those questions and, well, how quickly can you get this done? And I kind of chuckle. uh, Normally, normal market, 30 days, 40 days. Now we're looking at 60 days.
Okay.
Really, we're back there. Okay.
Oh, yeah. It very,
Even with a refi,
the
we're back
industry
there
is struggling to hit 60 days.
So
If,
they're not even going to see changes in their payments for 2 months,
for more than
good
2 months.
point.
in more than 2 months.
Good, very, very good point. If somebody needed money to tide them over in, let's say, 2 to 3 weeks, I would suggest the home equity loan, on that.
Is a home equity loan more expensive than refiing?
There are normally no cost for a home equity loan. home equity loans now, most of them go with prime, 3.25. It's most home equity loans are amortized over 15 years, which does raise the payment as opposed to amortizing it over 30-year, like over a 30-year mortgage. But if you need cash quickly, check with your bank. You can check with me. We have 20 branches in the Philadelphia area. But like I say, if you need, to your point, Brooke, what do you call it? If you need money, yes, you won't have your money for 60 days.
Okay. And is that what people are approaching you about right now? What are people
No,
most concerned about?
I think it's just more curiosity. Just it seems like everybody is nervous about everything.
Yeah.
Now, the other question that comes in with COVID right now is that with people being laid off all over the place, are they going to be able to qualify for refis?
We don't have any clear answer to that. I got a mortgage application yesterday from a Grubhub driver.
Well, they're probably busy right now.
Yeah, but this is going to be supposedly Monday. I heard that Fannie Mae is going to come out with some guidelines, because this is really not only people who are salaried, self-employed people have to shut down their business. I mean, normally we go with 2 years of tax returns for self-employed, and we're not at the point, but we'll get there pretty soon. We'll be asking for a first quarter P&L, profit and loss statement. That's going to be very interesting.
Yes,
And we're going to need guidance from Fannie Mae on how to underwrite
verify that.
Yeah. This is really
uncharted waters.
Yeah, this is new territory. Like I say, this is different than 9/11 effect or the mortgage meltdown. This is different financially and health-wise, obviously.
Mm-hmm.
You've given us a lot of information, and I'm sure it's a lot to digest for people. And if they would like to talk to you personally, Mark, what are the best ways for them to get in touch with you?
Okay, 2 ways. My direct cell phone number is 610-613-1596. Email mpruzan at First Rust. That's First Trust with 1 T. That, I can't tell you how many calls. Well, your email bounced. You just spell it with 1 T. Okay. mpruzan at First Rust. And you can always call Janet if you're having any trouble there. And really just, anything, I can do to help, it'd be my pleasure. And these are difficult times. These are uncharted, Janet said, uncharted waters. And, we got through the 9/11, we got through the mortgage meltdown, and, it will be a little bumpy, but, all we can do, we'll do our best.
Right. Well, I really appreciate you spending this time with us this morning. I hope we get a chance to do it again and maybe delve deeper into other things have related to mortgages. And I hope you and yours are staying well and staying away from other people.
Mm-hmm.
Just to wrap things up, a positive note, what are things that are on your mind in terms of what you have gratitude for?
Oh, okay. Well, first and foremost is family. Kids, grandkids, significant other, friends. if we're not healthy, none of this stuff matters that we're talking about today. So, you know, stay close to the ones you love.
Good advice. Well, you be safe and have a great day. And thanks so much for spending this time with us.
Okay, thank you both. And thank you everybody out there.